It's been over 1 year since almost 42,000 people sacrificed for PulseChain, and unfortunately there's still no sign of launching anytime soon. It seems like 3 months ago we were closer to launch than now, as we didn't have any exciting updates recently and more people started calling that the launch of PulseChain might be delayed for 2023. Also, this tool that can count the sacrifices for the people who suck directly from exchanges, that's supposed to be public a month and a half ago, is still not out yet. And I know that software is complicated and it takes time, but I'm a big fan of promising and over-delivering, but unfortunately we see exactly the opposite so far. Of course, this doesn't mean that PulseChain will under-deliver, but over-promising can really piss off the community and drive lots of negative reactions. However, the whole crypto world is now focused on the Ethereum merge, as it's been scheduled for September 15th, and there's so much hype right now that the price already doubled from the local bottom, and it reached $2,000 again. But what does this mean for PulseChain? Well, it's not very bullish. First, I want to point out that the Beacon chain was launched on December 1st, 2020, and if in fact the merge happens next month, that would be almost 2 years of development. I want to quickly open up a bracket here for those of you who are not completely familiar with the Beacon chain and clarify that this is a separate proof-of-stake blockchain that has been running parallel to Ethereum's proof-of-work consensus layer. The merge itself refers to the joining of the current Ethereum mainnet with the Beacon chain, which will make the Ethereum mainnet transition from proof-of-work to proof-of-stake. But before this actually happens, there were 3 testnets that were merged with the Ethereum mainnet, and their purpose was for developers to safely test features of the proof-of-stake network without any risks. Then the idea was for those testnets to transition to the Beacon chain and proof-of-stake and make sure there will be no surprises and the mainnet will transition without any issues. And since all 3 testnet merges were successful, now the mainnet merge is scheduled for mid-September. So a lot of preparation and development going on behind the scenes, and we are talking about one of the top blockchain developers on the planet, and it still took them almost 2 years to do this. Now, I'm not a software developer and I have zero clue how long it's supposed to take for PulseChain to launch, but I think there are going to be at least 1 or 2 more testnets launched before the mainnet goes live, because the devs are working on the code right now and someone has to test it, right? So even though the situation with Ethereum is much more complicated because they simply want to jump from one bike to another while both bikes are moving, PulseChain doesn't have this particular complication, but it has an improvement going on and they want to make sure that whatever they upgrade upon will run without any issues. So that means the code has to be tested as much as possible. So I assume that everything that devs are working on right now is gonna come out on the next testnet, so the community can put as much pressure as possible and test every single feature to make sure nothing's gonna break. However, we have nothing scheduled yet, so a potential new testnet is yet to be seen sometime in the future. Of course, there's a possibility some bugs to be found on these testnets and that's their purpose, but that ultimately means additional time spent to be fixed, new tests and so on. So considering all this, I can definitely see the 2023 scenario for PulseChain playing out, and in my opinion that won't be ideal for the project whatsoever. The main selling point for PulseChain was to provide better version of Ethereum. That's it. I mean, you get a free airdrop and all that, which is great, but the vast majority of people would want to hop up on the blockchain because of the low transaction cost, the high throughput and the zero inflation. But unfortunately the launch is just taking too long. We know that around 120 projects already are going to launch on PulseChain when the mainnet goes live, but we also know that there are only quite a few that look promising and have some potential, and most of them are just, you know, I don't want to say garbage, but they're just not so good. Also, still none of the ERC20 token founders declared that they will maintain and improve their projects on the PulseChain side, and we know that if they don't continue the development and improvement like they do on the Ethereum side, their PRC20s will just have no value and will be simply useless counterparts. So even though PulseChain might provide a lot of value and have a good market fit and all that, the timing is a bit off, and I think that was a crucial part for the success, because people would want to switch from Ethereum to PulseChain because of the Ethereum's drawbacks, but now they are leveling up their game and the incentive to switch over to PulseChain starts to diminish. It makes much more sense if PulseChain was launched mid-May, when people didn't even expect the merge to happen this year, because they kept delaying it for so long and people lost faith that it will happen anytime soon. So if you gave them everything they've been waiting for ready to be used, the effect was going to be 100 times stronger. Well, I don't say that all Ethereum users were going to move over to PulseChain or 90% of them or anything crazy like that, but I'm saying that the number will be significantly higher back then than what is going to be when we launch anytime in the future. And again, if you are not familiar with the details around the merge and you think that Ethereum is just going to transition from proof of work to proof of stake and that's all, let me actually touch a bit on that. First off, let me clarify that the merge has nothing to do with cheaper gas fees and it won't lower the transaction costs whatsoever. This is the main purpose of the layer 2 solutions, and that's why we saw projects like Solana and Polygon go parabolic in the last bull run. However, Vitalik Buterin himself said that after the merge, gas fees could be as low as 0.0 0.002 of a dollar, but that would be with rollups, and that is the third and final stage of Ethereum 2.0. Of course, this might be 1 or 2 years from now, but as it says on their website, originally the plan was to work on sharding before the merge to address scalability, but with the boom of layer 2 scaling solutions like Solana and Polygon, the priority has shifted to swapping proof of work to proof of stake via the merge. So they focused on transitioning into proof of stake first because the storing compressed cold data from rollup contracts would not be possible without the transition first. But why do I say that the merge is not just switching from proof of work to proof of stake? Well, there's something called triple halving, and if you don't know what this is, basically it has nothing to do with tripling or halving, and it's simply named after Bitcoin's algorithm that decreases the portion of Bitcoin awarded to miners by half every few years, also known as the Bitcoin halving. This makes Bitcoin more scarce over time and creates deflationary stress for the token. Therefore, miners are less likely to offload their bags. Bitcoin halving has been a pretty accurate indicator for the beginning of the bull run, so now many people speculate that this triple halving is gonna cause the same effect on Ethereum and it's gonna lead to a massive rally in the price. However, Ethereum's mining rewards mechanism is not algorithmic like Bitcoin, and it's based on community votes, but the results are essentially the same. The triple halving is not referring to the merge. The halving is actually the 3 stages of Ethereum's upgrade, which are the beacon chain, the merge, and shard chains. And it's triple because of the decreased distribution, burn after sending, and lockup duration. The merge will reduce Ethereum's energy consumption by roughly 99.95%, and since the validators ingest less energy to operate, the network can spend smaller block prices to deliver incentives for people to operate them. So the annual distribution of ETH will decrease from 4.3% pre-merge to an evaluated 0.4% post-merge. So instead of 13,000 ETH a day being created, after the merge there will be only 1,300 created a day. And in USD value at the current price of ETH, that's around $21 million a day sell pressure reduction. On top of that, miners who are getting paid ETH for proof of work have to buy computers, GPUs, eventually replace their equipment, pay for electricity and so on, and that puts massive sell pressure on Ethereum. But with proof of stake, this sell pressure is gonna diminish significantly because now as validators, the more tokens they stake, the more rewards they get paid. They won't have any of the costs that proof of work miners have, and that means they will have a big incentive to hold their bag of ETH and stake whatever they get as reward and not sell whatever they earn to cover their expenses. Also, the release of Ethereum Improvement Proposal 1559 or EIP 1559 introduced a burning mechanism to take Ether out of circulation by burning a portion of transaction fees and adjust based on block space and on-chain activity could potentially burn more tokens than it prints and therefore make the ETH token deflationary. Of course, this highly depends on the usage of the network, but since EIP 1559, Ethereum indeed has recorded deflationary days and even weeks. And the third aspect of this triple halving is lockup durations. Currently, around 13 million ETH is staked, which is around $26 billion at the current price of ETH. And when the merge happens, there will be 6 months to 1 year lockup period, so stakers can't just end their stake, sell their tokens and crash the price. And on top of that, after the lockup period, the withdrawals will be limited so they won't exit all at once. So all in all, if we in fact see the merge this next month, that will be pretty decent improvement for the blockchain and not so positive news for PulseChain. Of course, this doesn't mean PulseChain will fail and it will go to zero or anything like that, but in terms of mass adoption and being one of the top blockchains in the space, well, the chances definitely diminish, and I don't think it's reasonable to say that this doesn't affect PulseChain at all, but it's still yet to be seen how much exactly will be affected. However, the big gains for PulseChain are still on the table, as everybody wants to get in early on a promising project with good fundamentals, so returns like 50 or 100 or 200x look very likely to me, but something like 5000 or 10,000x I think is not so realistic. And of course, the reason for that is not just the Ethereum upgrade, but Richard Hart will now have a whole ecosystem with 3 projects behind his name on the PulseChain side, and I talk about PulseChain itself, PulseX and Hex on the PulseChain side, plus Hex on the Ethereum side, and that's 4 in total. So Hex managed to do 10,000x when it was on its own, but now there will be 3 more tokens that will be great in their own way, so the capital that needs to come in to make them move the same way to the upside as Hex is just insane. I know that I don't sound very bullish and many of you won't like what I'm saying, but this is how I see the situation based on the information we have so far. This is not a prediction based on speculations about potential issues with PulseChain and all that. That would be a pure FUD. I like to form my opinion based on facts, so I think that we definitely missed the timing here, and I don't say we should have launched with bugs or with some issues on the network. That would be stupid. What I'm saying is, it would have been much more beneficial for PulseChain if it was ready before the merge, and in the current situation I just can't see it as something positive. But once again, again, gains like 50 or 100x I think are still on the table, and they are definitely not something you can complain about. I'll be happy to be wrong on this one, and I don't call these gains to be the max you could get, but I like to keep things more on the conservative side.